Hello, it's Laurie of BlockchainBrad, and today I'm speaking with Kyle Samani. He is one of the key members of Multicoin Capital, a very prominent firm in the US. He's the managing partner, in fact, and also he is well known, for his contributions in the social media space as well when it comes to crypto. Kyle, thank you very much for making time to speak with me today.
Hey, Brad, super excited to be on. Looking forward to jumping in.
Likewise, mate. Now, as I mentioned, you're part of a prominent capital firm known as Multicoin. Obviously, there's been a lot of investments made since you started in May 2017. What's your take on the space, just briefly at the moment, mate, given that there's always drama, there's always complexity, and certainly there's a lot of information out there to learn about crypto?
Yeah, I think my aggregate read of the space is that the market infrastructure right now is maturing quite a bit for the large cap assets, especially Bitcoin. And then there's a real apathy for more or less everything that's not Bitcoin. I think we're getting close to that cycle low in terms of alts against Bitcoin. I don't think we're quite there, but I think we're pretty close to that cycle low. And I think that's going to reverse as more products and more services start to come out over the next 6 to 12 months. And people can see that encoding rules in software that's enforced by the masses, that's kind of a breakthrough concept. As we have more and more examples of that utility working in the real world, I think that the broader market is going to get more excited about the things crypto can do. Really, why crypto got excited in 2017, the reality in 2017 was nothing was ready to be used, but all those things are now starting to become viable. And so
exactly, mate. And I really wanted to talk to you about that because I knew, having looked at your portfolio as a firm, that it certainly, there was a resonance from my own research and what I considered to be prospective utilities. So in that context, Kyle, can we talk a bit more transparently about what constitutes a pre-utility? What does it mean when, for example, the team look through and do their due diligence, do their research, and then try and dissect the team and the tech and make that investment? Is that fair to say it's a pre-utility at that point?
I mean, that's certainly the kind of work we do when we really think about utility for the, that a impartial market observer can see, is that they can see a rational customer of some service paying whatever the market rate is, right? And hopefully that rate of new customers buying or that service is increasing over time. I think that's kind of the most generic definition of utility.
Right. Okay. So at the very beginning points, obviously they need time. That's the key imperative for these startups to essentially start to prove themselves, as you alluded to. So do you think that in the next few years, we're going to see a major shift towards a more tech-driven sort of investment rationale rather than the current scenario play out, which is, ironically, very much a speculative bet when it comes to this time period where we don't necessarily see all the evidence yet empirically of these utilities, but certainly, as you mentioned, that's really starting to move forward now.
Yeah, I think it's going to take a long time before speculation is out of crypto.
Yeah, I tend to agree.
Even as the rate of utility increases, I think that does not mean the amount of speculation will decrease.
Yeah, good point, mate.
Those two things can be correlated, and you can create. That's in fact how you get recursive, reflexive price movements.
Exactly, mate. And that's always the challenge as well, I think, for the top tech teams and also for the top capital firms. It must be interesting to watch this play out because outside of the scope of quality tech, there's certainly, very interesting raises being had, or there's very interesting performance on certain tokens, if you get what I mean.
Yeah, that's for sure. The markets are wild, and that's the nature of the beast.
Exactly. Now, mate, I wanted to talk to you about a thesis-driven approach. You recently wrote at length about Arweave, and we've talked in DM. This is the reason this conversation has come about, because obviously I'm certainly a proponent of Arweave, having spoken to Sam many times now since they first emerged. But you certainly wrote one of the better pieces that I'd read. So can we talk a bit more about Arweave in the context of, your investment as an investment firm, and also, why you advocate for this kind of permanent data solution?
Yeah, let's jump into Arweave. I'm super excited. We're big fans of Arweave. It's not one of the few protocols out there today that has real world utility that is doing what it says it's supposed to do, right. And the rate of usage is growing every single day.
Yep. Okay. So let's talk about utility. Again, moving back to that investment thesis, it seems to be that that's the driver. Where's the core utility, given that they're a native asset now, they're on the market, functioning, you know, the mining systems certainly working beyond proof of work in that proof of access. So once again, talk us through the utility of Arweave.
Yeah, so Arweave is a protocol that enables permanent file storage.
Mm-hmm.
So to contrast that with, let's say, Amazon or Google or Microsoft Azure, right? In those systems, if you want to go store a file, you know, you go to the Amazon and say, hey, I want to store 10 gigabytes for 1 year. And Amazon will say, great, you know, cost per gigabyte per month is 5 cents or whatever. And, you know, you can agree to pay the rate or not. And then after the end of 1 year, you know, that contract is expired and you can renew, or, you know, not, and then in which case they're going to delete the data. Arweave is a protocol that enables you to pay once and store a file forever, and to have a URL to retrieve the file that you know is immutable, that is mathematically tied to the actual data of the file itself.
Mm-hmm. Okay.
And that's what it does. That's new, and there really isn't anything like Arweave in human history before. It's a true kind of a 0 to 1 kind of invention.
Yeah, and mate, let's talk about, if we harp back to that original premise, you know, and you wrote about this at length, the actual problems that we face with centralized data control. Obviously, that decentralized aspect is relevant in Arweave. It's overused perhaps in the broader scheme of crypto. But what's the value of having a decentralized data solution where you can archive data permanently and you can do it with autonomy?
Yeah, so I mean, Arweave, there's a lot of things you probably want to store permanently. If you look at the course of human history, a tremendous amount of information has been lost, both in the physical and digital realms. Physical realms, library burnings and those kinds of things, physical persecutions. In the digital era, though, we have tons and tons of data that's now lost. If you look at, for example, Supreme Court rulings, right? Supreme Court rulings are pretty important kind of historical documents. And in the last 20 years or so, as the internet's grown in prominence, Supreme Court rulings have increasingly referenced external materials and content that are just typically been URLs to various web servers. Something like half of all URLs now referenced by Supreme Court documents are broken. And so information, the long tail of information in society is not permanent. In fact, there's a large amount of evidence that is the case. And there's a lot of very good rational reasons why we want to document human history, so that we can understand what's happening now, and then also be able to look back later and understand that. People take it for granted that the New York Times will be archived forever, and maybe that's the case. The New York Times, in fact, will be archived forever by Google or other search engines. Fine, but if you're not a world-class, world-renowned publisher, there's actually a good chance that a lot of the content you publish on the internet will go away when that web server goes down.
Right, and you raise a really good point there also with regard to those centralized parties, because really the big value add for Arweave is that you and I can actually control our own data, and that's really quite transformative and quite powerful. Yeah,
correct. There's a tremendous amount of value in that. The other really valuable part of Arweave is that the URL, so to speak, of the content you store on Arweave is just a hash of the content, and so it's mathematically tied to the data itself, which means that the URL can never change. And so not only are you guaranteed that the file you want is stored somewhere, but you're also guaranteed the link to the file will always work. And those are very strong guarantees that just were not possible until very recently.
Right, and mate, with regard to the mining process as well, we know the strengths of proof of work in accordance with the success of Bitcoin. But in light of what Arweave's trying to do, especially with the inherent needs for scalability, we see them advance beyond that to be less exhaustive with their proof of access. Do you want to talk to us a bit more about that and the way in which they don't rely on the full chain, but really just that last block in terms of reducing pressure computationally and in the sense of not being so exhaustive and so expensive?
Yeah, so Arweave is not actually a blockchain. Arweave looks like a blockchain, but it's not actually one. In a traditional blockchain data structure, right, every block has a cryptographic reference to the last block.
Right.
And then, of course, if to reconstruct, the chain from Genesis until now, you can verify all of those links between all of those blocks. All right, and that's like the kind of basic data structure, and more or less all the major chains today have that data structure. Arweave, the good thing about that data structure is that it forces every node. If you want every node to download the full history of the chain, right, then like that data structure kind of enforces it. And that's great for like ledger entries and just moving money around. But if you want to start storing images and PDFs and videos and HTML pages and larger kind of more advanced media types, it's going to become cost prohibitive if every single node in the system has to download the entire chain.
Exactly.
And so Arweave's solution is that they want to create a system where you assume that not every node has the full data structure downloaded, but they have different parts of the data structure downloaded. And so without getting into all of the mechanics, in the Arweave data structure, every node or every block is actually kind of have references to multiple other blocks in history. How those links are determined is kind of out of this scope for this dialogue, but as links to multiple other blocks. And then every one of those blocks has links to other multiple blocks. And so the idea is that nodes can store just a part of the system, but still as a collective know that the whole system is still kind of there in whole. And so then the way you kind of enforce that in terms of economics is every time you produce a new block, once a miner does the proof of work, they then have to do the proof of access and prove that they were storing one of those kind of previous blocks that was linked to.
Right. And that relates to the BlockWeave itself, the whole structure, as you mentioned, the non-blockchain, but utilizing key aspects of the technology to really advance. But it always seems to be driven by Sam's work and focused on utility. So in that context, what about the permaweb? Because that really does showcase what we're talking about before with the archiving value, the realities of trying to really change the narrative when it comes to data networks, really broadening the capacity of that.
Yeah, so I mean, what Arweave does very mechanically is it gives you a way to store content forever with a link. On top of that, then you can kind of build what Sam likes to call the permaweb. And that's the idea that you can have a internet of content that is permanent storage. And we think that just kind of it's a brand new concept. It's still highly unintuitive to people. What the implications are, second, third, and fourth order. But we're really excited about what this kind of means. And we expect that there's ultimately, as we continue to get society digitizes more, we continue to see more and more people manipulating things on the internet, changing things. We expect there to be increasingly value in having a single source of truth where that for a fact this thing existed at this time and then can never change, based on that fact.
Exactly, mate. And that's why we love the transparency and that immutability record as well. And I think that's what is quite understated in the crypto space, because obviously the agenda from the outset was more about anonymity, which perhaps is a bit misunderstood and misguided. But with regard to the proof of uptake, that adoption factor that often we talk about, you've raised some key points in your article about proof of adoption, proof of success so far. And this is just, innings one. This is just the beginning phase for Arweave. But clearly already there's significant numbers of developers.
Yeah, so Arweave, the main chain launched in June of 2018. It's just about a year and a half old now. And it's been just growth and usage of the chain has been growing nice and steadily. And really in the last, I think 4 or 5 months now, the rate of growth has accelerated. I think it's been something like 30% month over month growth in kind of new data being stored on the chain. And so now the rate of growth is approaching something like 100 gigabytes per month. And we expect that that's going to continue to accelerate pretty meaningfully going forward. That's happening as a result of more users discovering the service and manually uploading content. And then it's happening as there's now a wave of applications that are now leveraging Arweave to do all kinds of novel little things.
Right. So what are some of the ones that you're aware of, Kyle, with regard to some of those applications?
Yeah, so a few of the really cool ones we're excited about are things like our mail, or Weave Mail, I think it's called, which is a messaging service. We think kind of that are focused now on storing histories of maps, because maps change over time. So there's a lot of those. And then our Weave team is now working with, I believe, the folks at the Internet Archive to help back up some of their content as well. And so we're just starting to see the kind of early stages of these applications, but those are growing in number and accelerating.
Right. And one of the things that I've really noticed with the Arweave team is that they don't rely on that kind of short-term shill strategy. Interestingly, I say that because I've spoken to Sam several times, but that's always been on the basis of free interviews because, I really do want to bring it to the forum and let people know. But essentially, his strategy is more about being tech-centric and letting the tech speak and letting the utility speak through the apps. What are your thoughts, on that strategy, given that for the most part today, we see the converse. We see a strategy that's more about short-term, price, price pushing essentially through, fast, media strategies.
Yeah, I mean, that's one of the things that actually drew us to Arweave was realizing that the Arweave team is not about just pushing their token, but they're just about building the future of the perma web. And that's the kind of thing that you can't fake it. We can observe it over a long period of time that it's been true. And that's exactly what we look for in the kind of founders we like to back, are folks who are truly dedicated to the mission of what they're working on. And they're rare and few and far between in crypto.
Got it, mate. So with regard to it being an open source technology, that's always interesting too, because that's an offering for the world. Do you monitor the growth of the GitHub, for example? Are you active in terms of following the repos?
We do monitor kind of as an investor, obviously in the protocol, we do monitor that rate of development, net new contributors, and those kinds of things. And again, all of those things are all pointing up and to the right.
Got it. Now, the qualifications, obviously it's speculative in some sense because they started, with 4 PhDs, they had 12 people in their team. And obviously as they, they'll grow, based on the success of Arweave. But within the mining community, for example, there's always been some serious strength with that, given that it's such an organized technology, such an organized community. How is the miner sort of side of things in terms of support for Arweave's strong team?
Sorry, what's the question?
Are the miners growing in terms of support of the actual team? Because obviously the tech side is growing, the number of key members of the team is there. But I wanted to try and understand the growth of the miners, because they're so important to also consolidate the network and strengthen that as they move forward.
Yeah, so I don't have the stats off the top of my head, but I do recall that in our conversations, with Sam maybe 6 months ago, I think there was something like 150 or 200 miners, and now there's something like 400 or 500 miners mining on Arweave. And so that number's also grown nice and steadily over the last 6 months or so.
Yeah.
As the amount of data in the system grows, as the token price increases, as the community awareness and adoption grows, it's just rational that miners will follow. So that number has been growing right alongside the rest of the network.
Right. And mate, one of the things you did mention in your article as well was that it was Arweave is backwards compatible to IPFS. And that's something that, is quite unknown to many people. What's the value of having that backward compatibility compared to other technology?
Yeah. So, over the last 5 years or so, the Protocol Labs team has developed IPFS, and it's now really become kind of the standard for content-based addressing on open permissionless systems for file storage. And so Arweave makes it just trivially easy for developers who have been storing their content on IPFS to store it instead on Arweave. And so, Protocol Labs has spent a huge amount of time and energy teaching developers about this new model, and then Arweave can just basically inherit all of that for free.
I see. And it's great to be able to talk about this, so naturally as well. Clearly, you do know a lot about Arweave, and that really speaks volumes quite sincerely about your firm, because it proves that you do a lot of research in each of your investments. And mate, as you mentioned, the data growth itself has been substantial as well, over 5x in terms of that data growth just in the last 6 months. Why is it, do you think more generally, that they're having so much success when others are really struggling in this market?
I think it's a symbol that they have they've built a product that is resonating and that's solving a real problem for real people. And that's hard to do, not just in crypto, but in all startups everywhere.
Absolutely, mate. Now, a tough question to you, Kyle, on behalf, obviously, of you be speaking on behalf of the firm, is that in Arweave's context, they made sure that they had quite a distributed token very quickly. In fact, they even set up a means in which people could OTC, a legitimate desk, as I understand, for those who, so wished to exercise their rights or investors. But today, moving forward to today, it does seem that there is a significant and sound distribution of their digital assets out there. And in that context, it means that those early investors, including you guys, could have essentially sold their tokens rather than hold. What's your position on behalf of your firm? Are you firmly based on that HODL philosophy, or do you support the idea of the early entries or the early entrants and the VCs capitalizing for the profit and moving on and allowing for more distribution?
Yeah, so for some context, so the Arweave chain launched in June of 2018. Multicoin did not acquire any Arweave tokens until I think almost a year later. I think we bought our first Arweave tokens in May of this year, or maybe June of this year.
Okay.
So for the first 12 months of the chain's operations, Multicoin had literally zero exposure to Arweave. And so we were not, I like to think we're early, but actually we are not that. There were a lot of people who were in Arweave before us. We started acquiring tokens in the May or June timeframe of this year, and then invested, in around alongside our friends at Andreessen and at Union Square Ventures around that time as well. We haven't sold a single Arweave since then. We are very proud holders. We own a lot of the tokens, and we think that this opportunity here for Arweave is huge and growing, and like we're very, very long-term, proud, happy holders.
Got it. And mate, thank you so much for being transparent about the fact that you weren't in that initial round. I didn't know that. And it gives me a bit more confidence knowing that, you stand true to the HODL philosophy, that you're here for that, your long-term utility. Now, if we talk about, the fact that this is now on the market, as you know, CoinGecko providing a lot of the data for the token if anyone wants to know. But in terms of utility, it does seem to behave in that way, even early days now, in comparison to, highly volatile assets that again have a lot of back-end drivers that push that price. So are you confident in the real long-term development of this token in terms of value? Because it's easier for us to talk about since you are an investment firm rather than me talk to Sam, who can't really comment on this. Because is it fair to say, Kyle, that utility tokens can appreciate in value and not be a security?
Yeah, absolutely. Arweave is a clear value proposition. The network does what it's supposed to do today, and it's growing every month. I think the aversion to utility tokens capturing value, in fact, we were the ones who kind of popularized the idea of what's now called the velocity problem, which is just saying that having a token that you just use as a payment mechanism only is typically not going to accrue value. On the surface, Arweave does look like a payment token. However, in practice, when you dig into the economics of the system, what you realize is that it's not just a payment token, but in order to have the kind of economics of the system work, you actually have to lock tokens into the chain for file storage, and those tokens get released very slowly over time. And so that kind of acts as a natural velocity sink. And so, we actually spent quite a bit of time in doing our due diligence and modeling out the token economics and understanding, okay, how much data needs to go into the system to actually suck up, X amount of dollars of demand. You need terabytes going an exabyte. I mean, like how much data needs to go in order to kind of get to that level of scale. And so we understand that now pretty well. And we feel pretty confident that model, will ultimately bear out in driving the value of the Arweave network over time.
Yes, and mate, again, thank you for doing so much work on assessing the validity of certain tokens when it comes to token modeling, because there is just such an immense lack of focus on that, I think, more broadly. And there's just an assumption that the token correlates with, the value of the actual startup, and often it just doesn't, in the more broader picture of crypto. Now, obviously, the perspective, value of both Arweave and the token, based on the information that we're talking about, based on the empirical evidence, it would suggest that there is substantial growth, for many years to come of Arweave. But what are some of the more macro issues that you think perhaps, even Arweave itself is beholden to? Obviously, for example, we see the coupling between altcoins and Bitcoin, for example. We see inherent and rife manipulation that is happening in the space. So is Arweave sort of vulnerable to any of these more macro issues?
I mean, like all assets, of course, it's subject to macro forces at play. I don't think there's anything that makes Arweave immune from these things.
Yeah, okay. I like the frankness. Now, what about pump and dumps as well, the risks of that? What are your thoughts on that? Do you agree that it's happening? Again, is it a problem, given that you're trying to decipher the space and trying to filter out all of the crypto crap?
Yeah, so there are likely market manipulations on smaller cap liquid assets in crypto. There's quite a bit of evidence, and we haven't documented any, but there's lots of other people online who have shown how those things are kind of coordinated and run. So that's likely something that happens in the market. In terms of has it happened on Arweave specifically, given the fact that Arweave doesn't really trade on any major exchanges, I don't believe it has. Arweave, I think, was just listed on an exchange recently called Buybacks. I actually hadn't even heard of the exchange, and it was listed just a few weeks ago. And liquidity is pretty thin there. Still today, the substantial majority of Arweave tokens are traded OTC. And that's in fact how Multicoin acquired, most of its tokens over the last 6 months.
I see. And once again, thank you for that transparency. I mean, it is so rare. And having spoken to Sam about this issue, and I'm sure he wouldn't mind me mentioning this, is that he was always an advocate for the utility rather than having multiple exchanges, access this token. Because obviously he sees the inherent issues with speculative trading, looking for appreciation in value as opposed to real value of the technology. So he's certainly very reticent to just, openly have discussions or, even allow for any kind of manipulation, any kind that doesn't correlate, obviously, with his, core intention, which is to be representing a true utility. And I have a lot of respect for that because, as you would appreciate, is that, there are certainly issues in the space when it comes to certain exchanges listing tokens with a high fee. Sam won't play in that game. He just won't. And I really respect that the exchanges themselves should also be, I would argue, utility centric, focused on real propositions of value, not just, your short-term play.
I agree. I mean, the Arweave team has really not prioritized, exchange integrations and that kind of thing. And while it's probably good for the project in terms of keeping out too much speculation, at some point, as the protocol grows and as demand grows, liquidity becomes important. There are unintended consequences of having a liquid token, but ultimately it also increases access. And so if Arweave is going to become, the true perma web of the internet, right, then at some point you need to make it accessible to 1 billion people.
Exactly, mate.
Never going to happen in the OTC markets.
Got it. And it's good to know that liquidity does exist there. I wanted to ask you, your role in Multicoin Capital. Often we see in capital firms, there's also another sort of arm of them, and they tend to do consultancy or they do a fee-based model for services. Do you guys do anything like that, whether that be with Arweave or any other investment you've made in terms of supporting them? Because as you mentioned, Arweave does need substantial liquidity for it to really, start to come forward as a strong, utility force. So do you support, in any way that through your very vast network?
No, Multicoin has never and will never do any form of consulting work, advisory work, take fees from portfolio companies, full stop. We never have, never will. I never have. Tushar never has. None of our employees have during their time of employment here. They may have before they worked here, but once people are working at Multicoin, that is strictly forbidden. We're very adamant about it, and we will never engage in any form.
I love it. That's music to my ears, and I really mean that, mate, because I wanted to know that was your answer. Because for me, a true investment firm shouldn't be engaging in any other conduct like that. Now, one of the things that has been interesting, when we look at Arweave as just one example, the kinds of investors, Kyle, that invested in Arweave were really top shelf. We're talking about 1KX, Arrington, A16Z, definitely top shelf there, Coefficient Ventures, Union Square. But the reason I mention this is I wanted to better understand what's the dialogue among you guys over in Silicon Valley and in the US. Do you talk to each other? Because obviously you're all focused on top tech as well, and you want to invest in the best technology for this new era and the potentials, obviously, of blockchain and beyond. So, yeah, I was trying to understand more about whether or not, it's not collusion, obviously, but do you talk to each other so that you can give each other advice, share feedback, share resources, share research?
Yeah, I mean, it's very common practice for investors to share notes. And I mean, we're very public that we have relationships with a lot of other firms. Right? So Chris Dixon is one of the main general partners at A16Z Crypto, for example. Chris Dixon is personally an LP in Multicoin. That's public information. Union Square Ventures is an LP in Multicoin. Again, that's public information. Obviously, we have, by definition, relationships with these other folks at these firms. In the case of, let's say, 1KX, we have no formal relationship with them, but I've gotten to know Lasse over the last couple of years and have a lot of respect for him and what they do. And so naturally, investors, of course, have relationships and share notes on opportunities, and that's kind of naturally the way the world works.
Yeah, and I really appreciate that, mate. So in the context of this emerging market, when we look back on IPOs, for example, if we focus on this idea of hierarchy of access, I tweeted about this today, and it was meant to be really an objective comment. But I raised the point and said, if people don't understand that there is definitely dialogue had between certain VC parties, and they don't quite understand crypto. Because Obviously, at the highest level, you want to associate with like-minded investors, and that goes for firms, I imagine, too. But in that sense, how do we justify that in the context of hierarchy of access and investment when, for example, retail investors, can't simply, jump in? Should we be broadening in the opportunity, or is this just going to be, rehashing of old models?
Yeah, I mean, there are lots of opportunities for, I think, retail folks to engage, right? So like, there's a lot of public discourse, for example, on Twitter, where folks like myself will write about Arweave or talk about it on, a news article or whatever. And if you look at my Twitter, you'll see people, sometimes random people who I have no idea who they are, they'll respond to something I post with a question, right? Or they'll just say something and tag me. And I'm usually, as long as no one's insulting me or attacking, I'm actually pretty good about responding. And so I make myself accessible in this kind of very public forum for precisely this kind of reason. Crypto is fundamentally about democratization and access, and I'm a big believer in that. I obviously can't maintain, Telegram chats with 5,000 people. That's just not logistically possible. But I do kind of enable a public dialogue through forums like Twitter. And there's a lot of people who take advantage of that, and a lot more people who don't. And that's just kind of, how I like to think about engaging the world. Is I have these kinds of forums where that becomes possible.
Yeah.
Not all really do, but I do my best to try and be accessible to the public at large.
And Kyle, we do appreciate that, mate, because obviously, you'd be flat out very busy with a lot of the research and a lot of the, just the business that you do in your firm. But beyond that educational and informational approach that you do take, and the fact that you are public, which many appreciate, it's also the point of access when it comes to investment. Obviously that's what you guys are as an investment firm. So when the retailer invests, my point more is that they can't invest in that early entry position that's obviously more financially lucrative if indeed the startup is successful. Much higher risk earlier on, hence the correlation between perhaps a more lucrative investment. But what we have seen also is that some actors in the space have capitalized on this hierarchy and dumped on the retail investors, you see. And that's why I'm asking you about what your thoughts are on more generally this hierarchy of access, because there's just so much, convolution. There's a lot of muddy waters when it comes to, the strategy. We've seen that with ICOs and IEOs as crowdfunding mechanisms. So I just wanted to know what you thought of the future, whether or not there might be other means where perhaps retail investors can have a more equal playing field with people like you, so that there's less of a price difference upon entry into an investment.
Yeah, it's a really hard problem. So, right, if you're an early stage protocol or company, team, whatever, building some radical new idea, let's say you're trying to raise $1 million, right? Well, like, you can, let's say, get one person to give you $1 million, or you can get 4 people to give you 250K, or you can get 10 people to give you 100K, or you can get 1,000 people to give you $1,000, right? Just as kind of like simple distributions of like outcomes, right? To get the numbers to add up to $1 million. Well, if you're going to have 1,000 people give you $1,000 each, that means you need to have at a minimum 1,000 conversations, which is just, that's too time intensive.
Right.
And so if you think about kind of the realities of raising even like $1 million, just the realities are that the people raising the capital need to talk to people who they know can write bigger checks than 1,000 or 5,000 or 10,000. They want to talk to people who can write $250,000 and $500,000 checks. And obviously folks like us, we are very public and we say, look, we have capital, like we want to invest in early stage risky things. And so for just a lot of structural reasons, not on the capital side, but actually on the entrepreneur side, like there's just kind of structural problems with making it easy for them to raise money from lots of small investors. Now we've seen experiments with a lot of people trying to solve this problem. ICOs were one kind of potential solution to this problem. IEOs were another. If you look at like the Jobs Act that President Obama passed in the US in 2012, that presented another kind of regulatory framework for this. So we've seen people trying to play with different frameworks to solve this problem, but it just hasn't proven as effective because most of the time, it's oftentimes in the early stages, these things just sound very risky and weird, and most entrepreneurs don't want to subject themselves to public market scrutiny by saying, hey, look, we're going to open up all of our details and all of our plans and whatever, and have 50,000 people come and look at it, and then they're going to yell at us on the internet.
Yeah,
Like
you raised such a really valid point, and Sam's actually reiterated this from Arweave in that I remember meeting him in Consensus, and he was so busy with all the meetings with all the VCs, and he just made the point that he just couldn't wait until he had that capital, so he could just keep going, and really build out the technology. And the last thing he wanted to do was have to deal with a flood of people trying to come in. So I really do hear what you're saying. I think it's a complex issue, but certainly I'd love to see those in the retail sector have more opportunity, but in a way that perhaps it does appeal to also the teams that are building that technology. So, I think it's an ongoing challenge, and hopefully there's other solutions that come forward that do work. But right now, the reality is that you've made it clear that there are those early entry investors, and they certainly, for the most part, depending on what region they're from, they're focused on holding that position. But what about those who are not? What are your thoughts on those VCs? And they do exist, Kyle, that don't really care about the tech. They just use the fact that they have substantial capital behind them to help in a very transient way. Help them until they get on their feet, and then they just dump the tokens and move
on. It's not a practice we support. We know some folks who do that. We generally don't affiliate with them and don't really like doing deals with them.
Yep.
And we don't condone it. We don't support it. But we can't. We've other we can't stop it.
Well, what can though? Is it regulation that's the requisite for change?
I'm not sure, because crypto is global and these investors are global, and so regulatory arbitrage is a real thing. I think what the market is slowly realizing is, when they see a new protocol come liquid and they say, okay, there are some professional firms behind this, well, the reputation of those firms matters. Folks like Multicoin and USV and Andreessen and a lot of others have spent years building their reputations on the fact that we're not going to do that. We haven't done it in the past, and that we're not going to do it in the future.
Got it.
I can't prove to you that we won't, but we have developed a reputation that we won't, and we intend to maintain that reputation going forward. And so,
Kyle, thank you so much again. I'm really enjoying this conversation because you're straight up, mate, and you pull no punches. What about China? You know a lot about that, even as an observer in that space, and without trying to be in any way, racist or in any way focused on specific geographies. So that's not my intention, but we've seen a lot come out of China when it comes to crypto. They've got a lot of interest, obviously, in Bitcoin, a lot of hashing power, controls as well. And then beyond that, we've seen the influx of the IEO and the ICO and beyond. So are you bullish on some of the movements you do see in China in terms of pro-blockchain, or are you more concerned about some of the conduct there?
Yeah, I'm really excited about the future for crypto in China. Crypto in China, it clearly solves real problems for a lot of people on the ground who don't have access to financial services. It provides income streams to folks like miners. And now we're starting to see kind of government top-down support for blockchain technology generally. So I think those are all very, very good developments for the kind of industry as a whole.
Great. Now, mate, you've invested in a substantial number of technology, crypto-focused or blockchain-focused, and even beyond that with new innovations. What's the process that Multicoin Capital go through in trying to discern what is value and to that end point of investment?
Yeah, our underwriting process is actually pretty similar to most VCs. We want to understand what's the problem you're claiming to solve, how does the solution work, how big is the market, what's the background for the team, what are the network effects, the go-to-market strategy. Those are all pretty standard things. I'd say on top of that, we look at kind of some specific crypto-specific things like token economics, things like competitive dynamics in the crypto ecosystem, open source risk, those kinds of things. But our diligence process is basically just kind of talking with an entrepreneur, reading their materials, and understanding, what problem are you solving and how are you solving it, and how if it works, how big can it get?
Got it. Now, what's your strike rate like when you do the analysis? If we look at the likes of Algorand, Back, Definity, Keep, Scale, Taurus, the graph, I could go on and on, but if people want to know more, they can go to your website and see your portfolio, which I did. Many of these, I have to tell you, I entirely support in terms of education. I haven't invested in almost all of them, but for some of them I have. And the reason why, again, I wanted to talk to you more about this is to better understand, whether or not you acknowledge sometimes when perhaps some of these have come out and haven't been so successful in terms of their token release, and whether or not you acknowledge some of the flaws as well. If I reference Algorand, for example, there was a lot of criticism about their Dutch auction, to be honest. There was concerns about having that insurance policy they could buy back at any time within a year, I think. So do you acknowledge some of the challenges inherent in some of the investments in the models that they've come out with, the token structures of the investment portfolio you have?
Yeah, we do. And obviously, as the market evolves, we've learned a lot from both teams we have invested in and teams we haven't. And we do our best to kind of advise our portfolio companies. In the case of Algorand specifically, I can't make any specific comments other than that we are a very, very small investor in Algorand. And, we disagreed with the Dutch auction model, but it is what it is. And
yeah,
we continue to hold our tokens. So
got it. Now, mate, some of the ones that are coming up, I really wanted to ask you, you have your finger on the pulse over there. Definity, I've always wondered what's going on with Dominique, why they take so long. Obviously you support native tokens. That's what I've really noticed, because that's the driver for utility. That's the core engine for their real tech. What's going on there, mate? Why do some of these projects that have raised literally hundreds of millions take so bloody long?
They're solving a lot of really hard computer science problems, and every team has their own preferences on how open they are versus not. I unfortunately cannot comment on where they're at or what they're doing specifically.
Got it. Well, I appreciate that. Now, some of them are coming, as we know. The likes of Solana, Nervos has just come out. Lots more to come. Scale, Jack's, such a great speaker for scalability as well. Clearly, you're bullish on the future of tokenized economies when it comes to blockchain. Yeah,
we're super bullish, more bullish than ever. The power of these networks to kind of enable new types of emergent behaviors is really amazing, and we couldn't be more excited to be in crypto.
Absolutely, mate. Now, one of the comments you have made, or your team, is that you're trying to pioneer crypto activism. What does that mean, Kyle?
Yeah, so it means a few things in terms of kind of network participation, in terms of helping teams with messaging and their protocols and communications, helping them with developer relationships and identifying early types of developers to build on top of their platforms. So activism is a pretty broad term, but ultimately it is kind of how we help our investments, ultimately achieve their visions using our capital, our resources, our access, our connections. Activism is a pretty broad term.
Got it. Well, mate, it's great to hear that you are an advocate for the kinds of, innovation and the kinds of representation we do want to see flourish and just improve, and become more the majority rather than the marginalized group at the moment in this very crazy space we see. Yeah, I don't know if you know, but I stand for truth, trust, and transparency. How important do you think those kinds of words are? We see them used a lot, especially transparency. But are these key assets to really uphold the overall integrity and value as we start to push forward to perhaps more mainstream actors to really break down those borders of the microcosm that exists now, so that we see greater institutional investment, greater, an increasing light shed on the very nature and value of crypto more broadly?
Yeah, so I mean, let's look at like Bitcoin, right? Like Bitcoin is actually, it's all do not trust, verify, and Bitcoin is sufficiently decentralized now such that you don't really have to trust anyone else to kind of make Bitcoin work. But like if you go back to 2009, that just wasn't true. And so in all of these networks, they all start off with different elements of centralization, and they slowly decentralize over time. And so my expectation is that as these different networks, whether they're Nervos or Solana or Scale or Arweave or whatever they all start off inherently somewhat centralized around the founding team. And as the networks grow and mature, they decentralize organically. And we've seen this happen with Bitcoin, with Ethereum, with a lot of other assets. We've seen the SEC, for example, say something like Ether can start as a security and become not a security when it becomes sufficiently decentralized. And so we even have kind of formal regulatory guidance that's possible. And we're kind of seeing that happen across most of the major assets now in the space. And that trend we expect will continue right for the future.
And mate, were you surprised? I mean, I have to say I was absolutely shocked that they were so forthright in acknowledging the changing classification of Ethereum, for example, because quite rightly, when it did start, with that capital raise, it didn't have the inherent utility proof. No question it did not. But I argue for that term of pre-utility because without that investment, it would never have evolved into what the SEC are now saying as a commodity. So do you think, are you concerned at all about the slow process or the slow reaction to all the other so-called altcoins, the other startups that exist in the space in terms of classifying them? Because we've seen already the SEC and CFTC come out and suggest, very controversially, that stablecoins themselves may be securities, which is very difficult for me to understand. But beyond that, I would like to see an increasing clarity when it comes to classification of some of the investments that you've invested in, for example.
Yeah, I mean, we were surprised when the SEC made that determination on ETH, but ultimately that's a good thing because it sets kind of a bar for the ecosystem of the fact that it's possible. And I expect as these systems evolve, we'll continue to get more and more regulatory clarity.
Absolutely, mate. Well, Kyle, I can't thank you enough, quite sincerely. I love that you are, once again, just so sharp on those questions and, no fluff from you. Hopefully, mate, we can catch up again in the future as you continue to push for a cleaner crypto space as well, all built on, again, that long-term position of real tech. I can't thank you enough for that, that ethos, because I speak to a lot of CEOs. I speak to, as many parties as I can like you, and very rarely do I have such a clean response when it comes to, the real value here, and which is essentially changing a whole new financial paradigm and also an investment paradigm where those tokens actually have legitimate value and backed by, all the way to the top when it comes to the CFTC and the SEC. So thank you, mate, for being part of this space.
Hey, Brad, thank you for having me on the show. Again, I appreciate the kind words. We work hard to do our best to make crypto happen, and excited to see the space flourish for a long time.
Absolutely, mate. Well, I wish you well, and take care.
Bye-bye, Brad.
See you, mate.